let's talk financial liquidity and get this explained because it is a very important concept to understand within the world of money. Now, first off, there are two types of liquidity, but before we can even get to each of these types, let's just talk about what liquidity is as a whole. Liquidity at the core is just this. How easy is it to take something and then turn it into this, which is a dollar bill? So how easy is it, again, to take something and then turn it into, well, what we'll call cash? So let's think about something that is really liquid. Well, this itself. Why is this so absolutely liquid? Well, because it's quite easy to turn this into this because, well, it is already cash. So cash in hand is quite literally the most liquid asset that you can have because, well, by definition, it's already cash. Let's look at something that's still liquid, but not quite as liquid as that. How about this? Right here, we have a check. Now think about, how does a check work? What do I need to do in order to turn this into this? Well, where do I have to go? I have to go to the bank, right? So that is still very liquid, right? I just have to get this to the bank and then that will turn this into this. Now the one thing there is, I guess you gotta trust that the check's not gonna bounce. So that's why you would say that, well, a check is not as liquid as cash because, well, a check is not cash. Odds are it will turn into cash, but I mean, if it's some sort of, meth head, then maybe the check bounces. What's something else that would be kind of liquid, but not as liquid? And I just found this, it was on. So here's a knife here. So is this liquid? I mean, yeah. What do I have to do to turn this into cash? Well, I'm gonna have to put it for sale and I'm have to wait for somebody to come and buy it. So it's liquid, and it's more liquid in the sense of, it's not like this is gonna, this will, I don't even know, $10, whatever this is. But if I were to put this for sale for $10, yeah, it's gonna take some time for me to turn this into $10, for me to turn this into cash. Now, what's something that would be not liquid? Let's just think about where I'm sitting right now, my home office. In other words, a piece of real estate. Real estate is not a liquid asset. Why? Well, because first off, unlike this, it's gonna cost way more than $10. So there's gonna be a higher price tag for it. And when there are higher price tags for things, there's gonna be less buyers. So you have to wait, right, to sell your house. I could, think about a car. Yeah, a car is an asset, but in order to turn it into cash, you're gonna have to find a buyer, you might have to wait, you might have to go through some headaches, and there's a lot of things. It's not easy to turn a car. It's not easy to turn a house, a piece of real estate, into this because, well, I mean, there's a lot of stuff that goes into it. You got to go through all those different hassles. So that is what an asset liquidity is all about. In other words, the easier it is to turn something into cash, the more liquid it is. So right here, very liquid, the most liquid thing out there because it is what it already is. And then where I sit in my office, real estate, a very non-liquid asset. Now let's transition over into market liquidity. How liquid is a market? So for example's sake, I'm just gonna talk about the stock market. So a stock market, you're gonna wanna make sure that you're in a liquid market. What do I mean by that? Well, let's just go to my desktop here and I'm gonna show you a couple stocks and I think you'll recognize these companies. But remember, the decision is how easy will it be to take this stock and then convert it, turn it back into this, right? Because I can take this and go buy a stock. But when I want to convert that stock, turn that stock back into this, how easy is that going to be? And that's going to depend on, well, how liquid is the market for this particular stock. So what we're looking at here is just called a scanner, and I'm not going to go down that rabbit hole, but just understand it's showing us stocks and how liquid they are. How can you gauge this? Well, let's look over here and focus on volume. Volume is just telling you the liquidity. It's telling you how many people are interested, how big the market is. And the higher that number is, the more liquid that stock is. The more easy it will be to take your stock and convert it back into cash. So, I mean, let's just look at this. So what is a very liquid stock? I don't know, have you ever heard of Tesla? What's another very liquid stock? Have you ever heard of AT&T? How about Ford, right? So you're getting the idea. You're getting the idea here that, okay, yeah, very well-known companies are going to have a liquid stock. But let's look at something. Let's click on this and let's see if you notice what I notice. Are these liquid stocks? So a little quiz here. Hope you were saying, well, no, not at all. I mean, look at this. The volume, look at that, 0, 0, 0. In other words, if you were to buy this stock, when it comes time to wanting to turn that stock back into cash, you're gonna have a very hard time because there is not a whole lot of interest in these stocks apparently. I mean, and looking over here, I can't say that I've ever heard of any of these companies. So which does make sense why, yeah, okay, not a lot of people are interested in these companies. They are very not liquid stocks. So these would be markets that have very low liquidity because, as you see here, apparently not a whole lot of people are interested, and therefore turning this stock back into cash is going to be quite the challenge. So that's how it works. It's all about how easy will it be to turn something into this right here. And you want to make sure that if you take this and you go and you buy an asset, you buy something such as a stock, well, how easy will it be? As you saw there, when you start to look at the market liquidity, that's going to also be an important concept to understand, because you don't want to go buy a stock and then never be able to sell the stock because nobody's really interested in it, or it becomes very challenging to find yourself a buyer of that stock that you own, or any sort of, asset class, whether that be, in the various other markets that you could be in, even in the crypto market. So that's what liquidity is all about, how easy it is to turn something back into cash. So I hope this helps. If you have any other questions or you have any other ideas for these sorts of videos, then please leave those down in the comment section below. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up, as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.